Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor. This is Dentist Money. Now, here's your host, Reese Harper.
Welcome to the Dentist Money blog on DentalEconomics.com, where we help dentists make smart financial decisions. I'm your host, Reese Harper, here with my co-host and friend, Sir Ryan Isaac.
Hello, Reese. We are very good friends. Indeed. Yes?
Yes.
Okay. That was begrudging.
High energy.
I'm glad you introduced me that way because today we're talking about friendship.
I can't believe that we're so in sync. It's amazing.
In sync?
Mm-hmm.
You're like the Lance Bass to my Timberlake.
Who's that? No, it's the other way around.
I'm the Lance Bass. You're the Timberlake. You're definitely the Timberlake.
I'm the Bass.
I'm Joey Fat One.
Okay.
Fatone. Okay, well, in the spirit of today's topic, I did some searching online, and I searched for things that come to mind when you hear the word friend.
Sounds special.
Yeah.
Starting to get nervous, though.
Well, you should be because I found my responses in Yahoo Answers.
My favorite search engine.
It's most reliable.
It locks onto your device, and you don't know how it became your default search engine.
Yeah.
You're like,
You have the toolbar.
Yeah.
Installs the toolbar at the top. So Yahoo Answers, it touched my heart a little bit.
Okay.
Okay. And I'm going to share some of these with you if I could.
Okay.
Okay. The first person who responded said that a friend is someone who knows the song in your heart and sings it to you when your memory fails.
Okay. That's a little judgmental of people that are older, I think. I don't think she realized that she threw someone under the bus there that has
some Alzheimer's problems.
Yeah.
Okay. I think she meant well.
She meant well, but that felt a little bit rude.
I thought you would like it, but
okay. I liked it.
I'll keep testing.
It's pretty deep.
It's deep, and let me know if you need a tissue.
Okay.
These are getting emotional, okay? Then we have an answer from Emily on Yahoo Answers. I just thought I'd give her a little bit of credit. She says a friend is somebody who is always there for you, who you have crazy times with, and who you can confide in, and who you love more than you love yourself.
Yeah, she nailed it. Emily nailed that one.
It's classic Emily, right?
Totally.
Yeah, okay. Actually, she got one like for that comment, which is good for a Yahoo site to get one upvote. Okay.
Uh-huh.
Lastly, we have old Megan on the Yahoo Answers site. Megan said, "To me, a friend is the person I go to tell my secrets to, who is there through thick and thin and won't leave my side when they're most needed. A friend is honest and fun to be around. They help you through guy troubles and heartbreak, but they make you laugh and cheer you up."
Amen to that. Guys are such jerks sometimes.
Guy problems.
I really appreciate you sharing that with me today, Ryan. What should we do now? You want to have a hug or something? Maybe a fist bump?
We can fist bump it out. Maybe later. I'm good for now. We'll just go ahead. Let's move on to our topic today, if that's okay with you.
Okay.
Now that we've talked about friendship according to Yahoo Answers.
Yeah.
That was deep. We're going to help our listeners today understand why the stock market is their friend.
Right. Because you know what they say.
Yeah.
The stock market knows the song in your heart and sings it to you when your memory fails.
Again, the Alzheimer's reference.
Mm-hmm. It's exactly what they say.
Not to offend it. It's the exact, yeah. Okay. In all seriousness, though, if we're going to do a poll, though, and ask people what comes to mind when you hear the term stock market, we're probably going to get a lot of negative answers. It's just that phrase that brings a lot of negative connotations, stock market. So we want to give our listeners reason to think good thoughts about the stock market because it's really a powerful force that can help people build wealth over time.
Yeah, and the idea for this topic came when I was watching CNBC early in the morning yesterday, doing my rowing.
Little Concept 2 shout out?
On my Concept 2.
That's what you've got, right?
Yep.
You
I don't think I was is it Concept 2?
Yes.
PM5.
Oh, that's the version?
Yeah.
Is it black or silver?
Black.
I love that one.
It's a good little rower.
You training for a rowing competition?
Yeah, me and my little girl are in competition to see which fish on the screen will go fastest. And
you have one of those?
Mm-hmm.
Oh, that's cool. Okay.
It's black and white. It's 2 pixels. So don't get too excited.
Okay. All right. She won?
Yeah, she always wins because she sits there and just pulls on it all day.
Okay. All right. Okay. So you're not preparing for a rowing competition, but you watch CNBC in the morning while rowing.
No, I woke up in the morning, did my rowing because it helps me prepare for a very long day when I sit down in a chair and move my fingers on the keyboard.
It's a lot of physical activity.
Yeah, anyway, CNBC, they were discussing the trade of the day, which helps investors juice up their returns, you know?
They've got it figured out, the market.
So the advice was very heavy on emotion and super light on common sense, as usual, because we all know you can't outsmart your peers and gain average returns and avoid the downside of the market, right?
All at the same time.
Yeah. It's pretty easy to do. So you might guess in the short term that what somebody says on CNBC can be right, but it's not that sustainable. You don't just get to tune into TV and get your tips and then figure it all out. So
nobody has a crystal ball.
No, here's the truth, all right? And then we're going to talk about some really important stuff today. The way the market works, okay, is much different from the way that it's portrayed on TV. And media programs they're not bad. In some cases there's good education, but they're trying to get good ratings, which is really hard to do unless you make things sensational and bring a lot of emotion into it. And they'll admit to that. And that's why they always focus so much on big returns or the trade of the day, right? But there's a lot of other reasons why you should invest your money, and they don't always have to do with returns. And I want to clarify one important thing, okay? Because this is something I'm kind of like passionate about, and around the office this morning, it was kind of like
I've said it 4 times already in the intro. Okay.
Yeah.
And you're boiling.
The term stock market is not a very accurate term, okay? Markets, or better stated, a financial market is probably more accurate, right? Because stocks are just one thing you can buy inside of a financial market. So just don't associate any or all of your public investments with stocks. It's kind of like going to the grocery store and saying that you're going to the meat market. You know, you can buy a lot of things from the store. I like to get a lot of different things: specialty cheeses, specialty drinks,
Boar's Head,
kettle chips, Boar's Head meats.
Okay.
My wife's making me start to get these organic ones that are like not having as much hormones in them. But
nitrates.
The Boar's Head don't have nitrates,
Okay.
but you know they have like some other kinds of crazy stuff in them. They're not as natural.
You're finding other avenues.
Yeah, breads. I like to go to the bakery. You know, there's these little poppy seed muffins that are good to get on Sundays. Or you have 4 in a case. I don't know. They're fresh. They're not preserved. You know. Potato rolls.
But what you're saying, though, is there's a lot of stuff there.
Yeah, there's a lot of stuff at the market, okay? But you don't call it like the meat market. I don't call it the poppy seed muffin market. Okay? I call it the grocery store. In this case, the market, right? Or a financial market. There's a lot of things you can buy in the financial market. So I just want our listeners to be a little more savvy.
Okay.
It bothers me when somebody's like, I don't invest in the stock market. Well, that's
I own bonds.
Yeah, I mean,
I don't do the market.
You can buy stocks and bonds. Anyway, moving on.
No, that's
a good point. Okay.
Yeah, it's a good point. We just don't want to lump every public investment out there into the same camp and call it the stocks.
Yeah, I'd prefer that everyone just call it a financial market. Okay. So let's be clear about that. Moving on, but we will call it a stock market for purposes of the headline, so that you guys will open this podcast, because it has a much higher open rate when we write stock market.
We write stocks.
And if I just put market or financial market, no one would click on it, and it would be confusing. And now you have the context of my obsession.
It's fine.
Okay, moving on.
It's fine, and I'm going to say it 17 more times. Okay. There's other places you can put your money to get nice returns. That's what we want to talk about. That.
Yeah.
You can put your money in private business holdings.
Yeah, buy another practice.
Yep. Commercial real estate. Farmland.
My dad likes that.
Partial.
He's
in the family.
Animal. Yeah, and he's good at taking care of it too.
Okay. You have precious metals. The list is big, right? Mm-hmm. But there are unique benefits which are often overlooked that financial markets offer to investors.
Yeah, not beyond just returns.
Yeah, beyond just returns. We're going to talk about 5 of them today.
Okay.
So let's get started on our list of reasons why the stock market is your friend. The first reason is that the financial markets allow you to invest in small, precise amounts on a regular basis.
Yes. This is one of the most powerful concepts of a financial market. All right. You mentioned a few different types of private investments. So let's say you want to invest in some commercial real estate. How long would it take you to save up and make a purchase?
Well, you need a pretty good amount, usually 20-30% down of a building, right?
At least 10, probably 20.
Yeah.
You know, it depends on how big it is and how much you make.
Sizable.
If we all had to invest in these large-scale projects, our net worth would always be at risk, right? But financial markets allow investors to buy very small quantities of investments, right? $1,000, $500, $5,000, $10,000, $50,000. And you can set up these automatic investment plans and invest as frequently as you want. And that type of investing makes it possible for investors to benefit from downturns in the economy because they can continue to buy small amounts as they earn more money. No one really knows when those downturns will happen. So, you as they do occur, it's nice to have enough money to, even every month as you have excess cash, you can keep buying. So everyone gets the benefit of having their money invested over a longer period of time, which really helps compound interest kick in.
Okay.
And if all we could do is put in big chunks of money, we'd have large amounts that were sitting in cash or not invested. And when we did invest, our net worth would just be at risk in these big private opportunities.
So you're saying the moral of the story for point number one is that the stock market or financial markets, pardon me, allows you to build wealth in a more predictable or steady way because you can invest money every month over a long period of time.
Yeah.
Okay.
And you can call it a stock market, okay? We don't have to parse it anymore. But, people just know that if I start razzing you about calling everything the stock market, then we'll
refer to minute 3 of the podcast.
Carry on.
Okay. The second reason why the stock market is your friend is that while your money is in the stock market, you can have it back at any time. You have immediate liquidity.
Yes.
Principle number 2, liquidity.
Yeah, and this means you can convert your investments into cash whenever you need to. It's pretty much instantaneous, which makes it way different than private investments that we talked about. Like if you have $250,000 in a mutual fund and you need $10,000 tomorrow, you can sell $10,000 of your fund and get the money within a couple of days. You don't have to sell the whole $250,000, or you could also borrow against it at a really competitive interest rate. So it's very liquid. It's easy to access, and that separates a financial market from a lot of other private markets.
Yeah, I mean, you're not going to be able to do that with the dental practice.
No.
Or some real estate.
Or your house.
Yeah.
Right.
It's not to say that private businesses or real estate investments don't have their benefits, obviously.
Oh, yeah. That's where you're going to create a lot of your wealth from.
Sure.
Yeah.
It's just that liquidity that's not one of the things they offer.
Yes.
Okay. The next reason why the stock market is your friend is it allows you to have broad diversification with your investments.
Totally. I think this is one of the most important but probably least understood concepts in investing. The beauty of properly structured financial markets is they allow investors to have portfolios that are very diverse using really small amounts of money. I mean, relatively small amounts. When I say small amounts, it could be, millions, right? But you could also do the same level. You could get a large amount of diversification for $5,000 to $7,000 or $10,000. So you can have your money in one simple account, right? That includes a CD from a bank. Inside of that account, you can have a CD from a bank, a municipal bond that is for roads in the city that you live in. You can have a loan to the German government.
Yes.
Shares of Facebook or shares of a shopping mall. You could have gold or even futures for the price of corn, right?
Okay.
Which I kind of like, or lean hogs. Okay.
Corn or lean hogs.
So in one account, you can have all kinds of different things. And that's where this whole idea about not calling it the stock market, because most people, when they think of stocks, they're thinking of like something extremely volatile and something
saw on the news.
They saw on the news, it went down. But there's a lot of ways to achieve really broad diversification without having your money tied up in something that will drop 40 or 50% in a recession. Right?
Yeah, and I think a lot of that has to do with the next reason we're going to talk about, which is that just people don't understand. It's the stock market is your friend because the odds are on your side over time, right? As long as you don't try to game it and as long as you give it enough time, the odds are on your side.
Yeah, and what we would mean by that is that, when any asset that you buy, right, that has the chance to appreciate or go up, if you hold it long enough, it might change in price. If I buy a house, it's going to change its value every day. But over a long period of time, real estate appreciates it. It goes up in value. So do a lot of assets. Stocks go up in value. Real estate goes up in value. A lot of things that you buy through a financial market will appreciate. They have what's called an expected return. It's a predictable, positive return. And that might sound simple enough, but a lot of direct investments in small businesses, if you take the average of all those things, like you hear that study, or a statistic that will range anywhere from 9 out of 10 small businesses fail to 8 out of 10 small businesses fail. The probability of business startups is not a positive expected return. Like if it were, a lot of people would be starting businesses, but the expectation is that most of them will fail. And if you take all of the companies combined in a market and you average them all together, the market has a positive expected return.
Yeah.
And a lot of things can't make that same claim. So.
Right. And so what you're saying...
That's a little complicated, so you can make it simpler.
I thought that was very simple.
Okay.
But to your point, though, if you look at how the market performed from 1926 through 2014, the S&P 500, which is an index of the largest 500 companies in the U.S., they earned 9.9% in return on average. Corporate bonds earned 6.1%, and government bonds earned 5.7%. So basically, I mean, if you start early enough, the returns earned in these markets, they should be sufficient to hit your goals.
Yeah, that doesn't mean the value of your portfolio won't ever go down, and it also doesn't mean that the average, those numbers are averages, right? And markets don't work where you get the average every year.
You don't get 9.9 for 30 years of your career every year.
No, you'll roughly get anywhere from 70% one year to negative 50, right? In order to get that 10% return. And if you don't want that kind of movement, then you have to buy other things in the financial markets that don't have that kind of movement. And you have a choice, right? But if you want that kind of return over time, you have to own the asset that gives you that average return and accept the movement that you're going to get from owning it. Or volatility, like Ryan likes to call it. It's a fancy word.
It feels fancy.
Okay.
The final reason why the stock market is your friend then is that financial markets allow you to save time, your own personal time.
Yeah, this is another huge benefit that people overlook, especially dentists. They discount their time when they look at different investments. There's a lot of like we talked about this a few weeks ago in the John Elway podcast, right? But there's a lot of things you can do with your time. And dentists have a value of $500 or more an hour with their time. And I've seen dentists spend countless hours managing different investments. And if you invest in a side business or start managing commercial property, there's a time commitment involved in that. And you can end up managing people and phone calls and making day-to-day decisions. And there's usually a certain commitment that you're making to operate the business when you invest in something. On the other hand, if you invest in a financial market or a public exchange like a bond or a stock, that investment's totally passive. It doesn't require any of your time, effort, or mental energy. And you just fund the investment and let it go to work. So,
all right, my good friend, my good co-host friend. I'm the co-host. You're the host.
Okay.
We are friends. That's good work. Thank you. Recapping.
Thanks for listening to those 5 reasons. Okay?
Yeah, it's good. So I'm glad you got on the rower yesterday. It wasn't this morning, and you turned on CNBC. Although you might have rode today.
No.
Okay.
Did not ride this morning.
You'll be squatting later.
Yeah. No.
You'll be speaking to a group of dentists in Provo, Utah.
Getting home really late.
Okay.
Carry on.
Day in the life. Now, CNBC, the advice might not always be the greatest, like we were saying earlier, but at least you gave the idea for the show. So I'm grateful for that, right?
Yes.
And I think people do get so fixated on returns. So it's good to hear, all the other reasons why the stock market or the financial markets are a good place to invest your money.
Yeah, they're super powerful. You get the promise of a positive expected return over the long run. You can invest in small amounts. They give you instant access to cash if you have an emergency, and they allow you to stay really diversified. And as we just talked about, they don't require any of your time, so you can focus on doing what you're good at, which is taking care of your patients and growing your practice.
Yeah, and in our opinion, these advantages make it well worth paying someone to help manage your investments. Yeah,
for sure. And it just makes it passive, right? And I think that's really important. A lot of any investment, whether it's private, whether it's real estate, whether it's mutual funds or the market, it's important to consider how your time is leveraged. And this is one of the easiest types of investments to leverage your time with.
Definitely. Okay, I think we'll wrap it up there. But before we go, I'm going to ask you, what comes to mind when you hear the word friend?
I'm trying to figure out if I should say a joke or if this is for real.
Let's keep it let's end this.
I don't do jokes very well unless I'm, prompted in my head by a really heightened emotion. So I would say that the friend for me probably is someone that supports you and accepts me for who I am, lets me be myself, and doesn't make me change a ton of stuff about myself. People who make me change all the time, I tend to feel like
they're not your friend.
Well, they're my coach.
Okay.
Or like an advisor.
It's your
a friend
coach.
is just like, I don't have to worry about myself when I'm around them.
That's
right?
fair. That was a serious, genuine response. Appreciate
Sorry.
that. You're a good man. You should actually go post that in Yahoo Answers.
I already did. Look at it in 1996.
96.
Okay.
That's solid. All right. Well, thanks for joining us, everybody. Remember to leave us a review on the podcast. If you want more information, you can go to dentistadvisors.com. You can sign up for our free newsletter or schedule an appointment on our calendar. And as always, we've got our phone number on the website. Give us a call, and we'd be happy to chat.
Carry on.